Hi, I'm Eric from Viking Analytics. Thanks for taking the time to watch this short video. Today I'm going to give an overview of our Gamma Dynamics report. The Gamma Dynamics report informs traders on gamma exposure, expected volatility, and possible expiration pin levels for the primary stock indices and ETFs. One of the most basic things to know about gamma exposure is as the price value of the SPX rises above the gamma neutral level, which is shown by this middle line. As the price rises, you can see how the volatility decreases. This is the next day return shown on the y-axis. But as price decreases below the gamma neutral level, you can see that volatility expands. So the quick summary is that daily volatility decreases as gamma exposure becomes more positive. Daily volatility increases when gamma exposure becomes more negative. There's a lot to decipher in our gamma dynamics charts, so this is a quick overview. The blue line at the top, this is the total call gamma in aggregate across the strikes. The lower red line is the total put gamma, and the line in the middle, the black line, is the total net gamma. This is call gamma minus put gamma. Now going back to the gamma exposure, one of the main things we want to look for is when the closing price level, in this case was 43.84, was above the neutral level of 43.05. And so we know that in this case, there's positive gamma, and we tend to have a conversionary environment. So positive gamma is when the closing price, in this case 43.84, is above the neutral level, 43.05. When gamma is positive, the market will tend to have lower volatility, shown by the scatter plot on the prior page. When gamma exposure is max, or above, then volatility is the lowest. So what we're showing here is this is the total max gamma. In this case is going to be, looks like that's right around 44.30 would be the max gamma. So if the value would rise to 44.30 on this particular day, we would expect the volatility to begin to decline. Also on the charts, we're looking for open interest pins. So call and put open interest is shown as histograms for the nearest option expiration. So the call open interest is shown as these blue histograms, and put open interest is shown as the red histograms. Missed that one. A concentration of call and put open interest can result in a pin when there's positive gamma. So in this case, on the close of 7/12, there was a lot of call and put open interest here at 43.50. In this case, this would have been a Wednesday expiration because SPX, SPY, NDX, QQQ, and RUT have expirations on Monday, Wednesday, and Friday. And so when these charts are published, if it's a Monday close or a Tuesday close, you're going to see the Wednesday open interest. If it's a Wednesday or Thursday close, you'll see the Friday open interest. So what happens is when you have this concentration of the put and call open interest, we can expect there to be support and resistance at these levels and possibly a pin into expiration, particularly on the Friday expirations, and even more particularly on the third Friday of each month. We have one final chart in our quick overview, and this is going to be an IWM chart. We're showing this for two reasons. First, this chart has negative gamma in this case because the close was at 226 and the neutral level is 235. And secondly, this is also a Friday only expiration ETF. So IWM and DIA options currently show the Friday expiration only. In this example, IBM has negative gamma, as I just outlined. And also want to highlight that the light gray line in all the charts, this shows the total gamma after the nearby expiration. So what happens is when you have a lot of gamma expiring, like in this case with IWM this Friday, you can see a big difference between the black and the gray lines. And that's meaningful because when there's a lot of gamma expiring, you can either expect more risk if it's a negative gamma, or you can expect more of a pinning effect if you're in a positive gamma range. So that's it for now. I encourage you to email me at eric@Viking Analytics if you have any questions. We're currently offering a 2-week free trial to this report. We want to solicit as much feedback as possible so that we can improve the report. You also can visit our website to download a sample report at www.viking-analytics.com. Thanks a lot for your time and attention.